to $1 billion to high impact causes that will help humanity. How did you arrive at this amount of money and these causes that are in, and what measurable change do you hope that this money will make?
Hey, hey, what's up,
So this year that you plan to go out.
What is up, guys? It's your boy GRC. Mike's plugged in. We're locked and loaded. We got a lot to talk about today. Me and Sam STOLT have both been live today. To be honest, I can't stop. Right now, there's too much nectar. There's too much nectar for the guys that really like covering this stuff, and all the guys that pretended like they knew it was going on are evaporating. And Sam predicts that people are going to need to get a little more wrecked. Some normies too, he thinks. He thinks it might even bleed out to like not normies, but like normal, average, but high, like over 100,000, maybe to $1 million investors, like getting a little scared. He's thinking, and I was like, oof, I didn't even think about that yet. And guys, we're not even there yet. we still need to get SBF out, and then the shakeout after that of everyone who's just nuclear scared to live their own lives. And then maybe we get back to, but there's assets. I'm going to say this before I switch over, and I am going to switch over like right now because there's just too much to cover. There are opportunities in the next 6 months, within today to the next 6 months. Huge opportunities for retail investors. I'm not going to go ahead and say I know what the heck. I don't really even think necessarily there's that much opportunity in the next 6 months for non-retail investors, because I think these big people are going to be scared, boy. But guess what? With these low liquidity assets that are close to the floor and that are new, have product market fit, have communities, have good trusted founders, there's opportunity. Hundreds and hundreds of X opportunity for some stuff. I won't hit all of them. You know, I'm sure there's stuff out there that'll do that. And that's critical to remember, Sam, because everyone's scared, and I'm just filled with joy because I know that my brain is going to do enough pattern recognition to realize there's something juicy going on. And people innovate in times like this. People get dirty, get busy. Guys like me won't shut up. And then there's a million of us, and then people are bigger, smaller. So anyway, we got the blue check on Twitter. Let's give Elon biceps in the chat. I don't know exactly how the verification process works on Twitter, but Bullish said, go to the settings and click a button, and I did, and it happened. So I don't know if that's cool or not, but I'm about it. Crypto in the Morning live every single day at 11 a.m. Eastern, guys. If you retweet this tweet, I will follow you. Just because I love, today's good. It's just too good to be true. Crypto in the Morning, every single day, 11 a.m. Eastern. Sam's in the back. We got it. Bullshocks in the building. We're going to talk CPI numbers. We're going to talk Terra Luna. I mean, damn it, I always get the Ponzi's confused. We're going to be talking about FTX, and we're going to be talking about absolute corruption. It's going to be freaking great.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning. Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
Waiting on phone.
Crypto in the morning. Crypto in the morning. Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stake. Got me some heads on, I'm making it rain. Pay me some maxi and that's just in case. GymRatCrypto sent me to show you the way. Crypto in the morning. 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 Crypto in the morning.
what a wild time to be around in crypto with the numbers that are going on with FTX, with Alameda, with right. I don't know if you saw this USDD, which is Tron stablecoin, which is an over collateralized stablecoin, meaning you have equity built in there, but the equity is their own token and Bitcoin, something similar to say like FTX giving money to Alameda.
When you think about, just before we get in, we're not going to get into this right now, but we will 100%, because I need to talk about Justin Sun. I need to go there and I need to look deeper. But what do you think about that product? Do you know it? Do you have insight there? Or like in just if you were thinking on your feet?
I very elementary understanding of it, but I'm not. I looked into it to the sense that like they have a bunch of their own token backing up their stablecoin, and their own token.
Dude, let's do a deep dive on that. If I schedule that and find someone who knows a pretty darn good amount and like put that on, I want to do that, because that I just keep pretending like I don't care, but I do care. So I want to pay attention more to that. But we're going to get into, Sam, you're going to comment a lot today. So just don't worry, your mouth's going to be moving. Promise you that. And I'm going to pull up the CPI little report that I watched just to get I like to get the meat and potatoes out so we can kind of just talk about it, because we all know that there's a little reading between the lines to be done with most of these things. So Sam, I want you to sit back and please tell me to stop if you want to point something out. Like, I would love if you did that. But we have 10, 15, 20 minutes of a couple things to just kind of give us all the rundown. And then we're just going to get into it all, like me and you. And we can pull up whatever. So let's get straight into this. These aren't crazy long videos, but there's one or two of them. Is it going to do the thing where no audio happens? Oh, no. It's just not.
This is the beginning. Starting now. This is
Hold on,
the currency game here.
Send me the links if you need to.
Yeah. Here we go. I want to catch it right in the beginning because there's so much news. I'm telling you, you miss it for 2 seconds.
It is November 10th here in New York City, as our executive producer likes to call it. This is Yahoo Finance Live. I'm Brad Smith alongside Brian Sazi. Hyman has the day off. Markets are in rally mode this morning, as you're seeing evidence with the Dow futures right now showed signs that inflation might be cooling. Let's take a look at some of the market action here. You've got the Dow up by about 770 points. It was 800 points just a moment ago, but up by about 2.4% here. And the NASDAQ futures, you're also seeing that ripping to the upside to the tune of 472.3% in positive territory here, and also just 30 minutes ahead of the opening bell. You've got the S&P 500 futures also in positive territory, up 3% right now.
The market loving this inflation data, what it may or may not mean to the Federal Reserve. But here are 3 things you need to know right now. As we just mentioned, inflation is showing signs of cooling. The October CPI index coming in at a headline reading of 7.7% year over year. Core inflation rose 6.3%. Yahoo Finance's Jennifer Schomburger has more. Jen.
Good morning, Brian. The consumer price index clocking in still quite hot, but cooling from previous months, perhaps in a sign that inflation is beginning to moderate. Those numbers coming in below expectations. Month over month, that CPI headline rising 0.4% versus the estimate of 0.6%. CPI core, which excludes those volatile food and energy prices, rose 0.3% versus 0.5% expected. I want to contrast that with the monthly increases of 0.6% for both September and August. So up 0.3% in October, clearly cooling a bit there. Now, on a year-over-year basis, that headline number up 7.7% versus the estimate of 7.9%. The core up 6.3% versus the estimate of 6.5%. I want to take a look at core CPI year over year going back to July, because that's going to give you the trend. So we see it clocking in at 6.3% just last month. That's down from 6.6% in September, coming back to the levels that we saw previously earlier in the summer, but still higher than the 5.9% in July. So what's driving all of this? Rents. They are very sticky. The index for shelter contributed to over half of monthly all items increase, with the indexes for gasoline and food also.
Sam, that kind of makes sense to you, right? I noticed that most people are mainly paying for housing. Like if you ask like the average Joe, like what majority of his money is going to right now, not like for, it seems like half like would be like housing, whether that's rent, whether that's mortgage. That's going to be the thing that people are like, I need to pay that because, you know, they get sketched. But like, so does that sound right? Is this like a decent little video for you?
This is a great video. Good find here. A lot of stuff's happening right now. There's a ton of stuff.
That's why you got to start at the bottom, I think. So I hope people don't not like this.
This is great. So think about this. If we saw the Fed minutes last week, if the Fed sees this data and they believe that inflation is tracking down, they want 2%, right? So if they believe this number's coming down, then by this data coming out, market participants are looking at this and thinking, oh, maybe the next Fed meeting, instead of 75 basis points, it's only 50 basis points in terms of interest rates going up.
What do you think?
I was actually.
I didn't like that. I don't like that smirk you made.
Well, no, I remember. Do you remember 6 months ago, 3 months ago? I was like, hey, I think by the tail half of the year, inflation is going to come down. We have skyrocketing FX markets, meaning the USD value relative to a basket of, say, Canadian dollar, Australian dollar, the euro, the pound, even the Chinese yuan, and the yen as well, which is Japanese currency. The U.S. is strengthening, right? So that means that the country, U.S., that is always in a deficit, right? A trade deficit, meaning we buy more shit from other countries than what we actually are producing. But the currency we buy with,
and they kind of pretend like it's kind of the arbitrage, like within the United States does that too. It's like we pretend like we own all the stuff, but we really don't.
Yes,
we buy it all, and we just like fund it in like backwards ways.
And or like wars and like
exactly.
but when our currency has a 50% increase in its value in the course of like 18 months, that means that all the stuff we import from China, all the stuff that we import from Canada, from the Eurozone, that stuff is 50% cheaper. Even if in that market it went up by 20%, we have a 50% increase in our currency value relative to that currency, so that the stuff is still cheaper for the US, which would be negative on the inflation front. Then when you stack on top of that, you have commodity prices. We looked at this 3 or 4 months ago, right? Commodity prices for lumber, commodity prices for iron, commodity prices for copper. These things seem to have already hit their peak, and we're trending down. Like these are the raw.
I remember that.
Remember, right? Well, these are the
we were talking about that. That was beautiful what you just said there. All of that. That's keep some of those in the tank. Keep some dopamine reserves in the tank for more of that. We're gonna play this for another 2 or 3 minutes and just get kind of a little more bass for this, and then we're gonna do one more little video, and then we're gonna get into the absolute storm of harassment that's going on online for our boy SBF, because he went up in everyone's crib and said, I'm a nice guy. I know what's best for people. I have everyone's best stuff in mind. And no, he is a lying piece of garbage. And he went up in their crib. He went up in Gary Gensler's crib and told him, hey, you need to regulate for me because I have so much money and I can save all of the crypto people. And Gensler got, what do they call it? Shoe whacked is what they said on the interview. I was shoe whacked or something, like basically when
what he got was some of that. He got some of that.
Yeah, he got licked. So anyway, we'll play this for a minute, Sam, and we'll get back to it.
I want to zero in on energy and food. The energy index increased 17.6% for the past 12 months, while the food index was up nearly 11%. And while these are hefty increases, they were smaller.
It was hoodwinked. I'm sorry, hoodwinked.
We paid 12.4% more for our groceries over the past 12 months, measured, or I should say, on a year-over-year basis, versus an increase of 9% with meals we eat out. So that's a bit of a reversal in the trend that we were seeing, where we were paying more in the grocery store than we were for eating out in restaurants. So perhaps a good sign there. Bottom line here, guys, inflation's still an issue, but showing signs of cooling, especially on a monthly basis. And while this is a lagging indicator, the Fed clearly going to take this into account in their policy deliberations for December. We will get another reading, though, on CPI when officials commence that meeting in December, though right now it looks like this could bode for a 50 basis point rate hike versus 75. Back to you.
Jen Scharnberger, thanks so much. So, Brad,
Literally what I was
Ben
just
called out
saying
the food at home index 0.4% over the past 12 months. Cereals and baking goods up.
Also here, we have they said a 12% increase in your groceries. So first of all, anybody who actually goes to the grocery store knows it's far more than 12%. But let's just assume 12% was accurate. Now, think about this. 12% increase in costs. Okay, well, what did your income do as a wage earner? Well, if you look at the data around income, it actually increased by about 8%. So you have groceries hypothetically going up by 12%. We all know that's garbage. But your wages are going up to 8%. That still means you're in the negative, period.
That means you're not eating much. If you're anything like GRC, you're keeping your calories low while all these dorks figure their stuff out. All right? Because I ain't giving theirs jack nuts my money. Hey, one of our favorite dorks that Omega Rec dorks that interviewed RH one time is Kevin. But Kevin, yes, Kevin is a complete moron when it comes to cryptocurrency. Let's not get it twisted. But he is not a complete moron, whatever. He just doesn't care that much about crypto. You can tell. And I could tell that. But he does know. He pays attention to all these numbers. So you trust me that, because that's his bread and butter. Or at least that's what his audience is like. That's what he does his audience. He kind of quit crypto, and it makes sense. Like, he interviewed RH and he didn't care at all about Hex. You could tell he didn't care about any of it. You could just tell he just wasn't in his scope of caring. But I watch him for this kind of stuff. So we got it's just for 4 minutes and 20 seconds. We got him talking about, this was an hour ago when everything launched. So
Ooh. By the way,
holy moly, the tables have turned. Federal Reserve has responded for the AI data. We got a Nikki Leaks update. We've got so much to break down in terms of market expectations. We've also got a temper euphoria. We're still, we still have a report coming up. Okay, we'll talk about that. But folks, wow, CPI comes in about the reactions to that. In case you haven't yet seen my reaction, especially when my prediction was nailed right on, predicted month over month of 0.4 versus expectations of 0.6. That's what we got. Year over year predicted 7.7. Market was expecting 7.9. We got 7.7. That was awesome. Core month over month coming in at 0.3 below expectations, and core year over year 6.3 below expectations. So great news. Now, what do we know? Here are some things that we know. First, we know that shelter inflation made up over half CPI move. That's insane. Half of the entire CPI increase was because of shelter inflation, which we know that rents have already peaked and they're going down, but CPI inflation is still trying to catch up to it because of the way they measure it with owner's equivalent rent. It's so stupid. But the point is, it is making up half of the inflation we're seeing now. And markets are saying, well, you've got a few different ideas, but markets are overall saying that we expect that to actually really meaningfully start rotating down and really drag inflation down very quickly sometime in 2023. Some market experts say Q1, JP Morgan says Q3, but either way, the consensus is, hey, rental inflation is expected to peak. Now, if you actually remove rental inflation from core CPI, this is not saying we're not having empathy for people who have to pay higher rents. It's just saying, if you want to isolate where the inflation is, if you remove, and I tweeted this, if you remove shelter inflation from core, you're at negative 1%. The first negative read since May of 2020. That's insane. Okay, that's like the bottom of the stock market. Well, bottom was like March, April, but near bottoms during the COVID pandemic. Make sure you follow me on Twitter as well, at RealMeKevin. This is really good. So not only are you now seeing shelter inflation or core inflation negative when you take out shelter inflation, but you're seeing the Fed already respond to CPI miss this morning in a great way. Fed Harker had talking or some chatting to do this morning, And he immediately picked up on the CPI report and now suggests that it could be appropriate for the Federal Reserve to pause at a Fed funds rate of 4.5%.
Pause it here for a second. So
Yes,
no, you're good. If anybody goes back and watches the video from 3 to 4 months ago, can find that video. I literally said,
I could probably find that. I remember that video. I
in
remember Dish, so I could find it.
in that video, I said by the end of the year, possibly early next year, the Fed will probably start lowering rates. And if these numbers are what they like coming out this way, we could potentially see 0% increase, as Kevin's mentioning it here, which made me think of that. And I wouldn't be surprised if, because the data that you look at, if you're always looking at crappy data, meaning data that's like 6 months old or 7 or 8 months old, because that's how they track the data, and then you were looking at a more of a say a different metric of like understanding reality of like current prices of things, you get a better picture of what's going on. And I wouldn't be surprised, and I said this back then, if the Fed, there's I think 2 more meetings before the end of the year, actually starts to lower the rate, or if not early next year, starts to lower the rate. I just wanted to point it out.
Yeah, no, for sure. No, definitely. And we're going to do a super awesome live stream on the next number when the numbers come out. It's going to be, we did it for the first time. This time it was fun, but we all kind of knew what it was going to be. So we're excited this time because, you know, whether or not it's the same, we're going to have crazy news, crazy volatility. We could be much richer or much poorer at that point. I'm telling you, for real. Don't think because everyone's sad, that means it's not good. Low liquidity assets with product market fit that have liquidity that's not bound by all these VCs and rich people, but it is real DeFi. Oh, it gets dangerous. Oh, it gets extremely dangerous. So let's play them just another minute or two.
Huge shift. Just last week after Jay Powell's talk, we were thinking potentially markets needed to price in a Fed pause at 5.25, 5.5. And that sort of expectation started leading markets to say, well, what if it goes 6%? And that's why we just saw this utter decay in the stock market. And it was now markets are pricing in a Fed pause 4.8%, which is actually slightly above where Fed hawker is. And anytime that terminal rate comes down, stocks tend to rally. Anytime that terminal rate goes up, stocks tend to fall. So if Hawker's at 4.5 and he's right, and the terminal rate right now is deemed by the market to be 4.865, and we see that come down, you can see continued pushing up of the stock market and the continued pushing down of the US dollar. Remember, the US dollar does really well when bonds in America are yielding more money because more international buyers want to come to America for the guaranteed rate that treasuries offer you if you hold to maturity. They're the only thing you could call a risk-free investment. And in order to buy treasury bonds, you have to buy the dollar. So the dollar's gotten really, really, really strong. But as soon as inflation peaks, we expect it to collapse. And the collapse of the dollar has already started. If you wanted to invest in the dollar. Before we get into that, I want to thank today's sponsor.
Hell no, Kevin. Hell no. Now, he has a what now section, and we can play it, or we can stop it there and move on, Sam.
We can go through the next section, but the currency stuff is very interesting too, because if you have, we saw the data in that Yahoo thing, you can go look it up yourself. The dollar relative to, say, the pound, the Canadian dollar, the Australian dollar, the euro is, and I only looked at, I think, the pound, but I would bet it's a similar case across the board, is losing value. So this would be relating to crypto, is Bitcoin is actually pulling further away from Ethereum, right? That would kind of like be the idea there. And
it's possible, man. It's possible for sure, because Bitcoin seems like a better investment. Every freaking DeFi dork that proves to me he's a narcissistic, overinflated, unchecked wussy. I see more. There's a lot of those guys. And then I'm like, okay, so Bitcoin is not as bad as people say. Just because people want you to buy it and they say it ain't going down doesn't mean it's the worst thing in the world. That's everything. At a minimum, people do that. So, but it is important that you know, you can buy it whenever you want and you can sell it whenever you want. Somehow, some way, I mean, at a minimum. I don't care about censorship resistant as of right now. Like, I know that's why it's all here, but for God's sakes, I just don't know what it's going to look like. I don't think censorship resistance is at the top of the first phase of crypto. Maybe like a latter phase where we can get more into it and more smart people that have integrity to get together. But right now they all have to roll solo, and then you have to guess which one has integrity, because they're not going to work together. That's sketchy. It's crypto. You can't just have partners all over the place. They'll nuke themselves. And anyway, let's play this just for, and please comment on this as we go. We'll give him another 349, see if he impresses us. But hey, say what you want about Kevin. He knows more about this market than all of you combined, probably.
And he makes more money than you guys.
Probably, yes, I would assume. And he's not worried about crypto because, frankly, he's probably rich. And he probably doesn't like the risk. It probably makes him not like, some people are rich and love risk. Some people are rich and no love risk.
Well, one thing about him is he's very transparent with like the stuff that he does. Even recently, he got rid of his entire real estate portfolio to buy the bottom.
Go.
He's also mentioned on the podcast that he makes over $20 million a year from multiple different businesses that he has.
Okay, I'm gonna throw up. Let's go.
When you deposit,
I didn't know that.
if you wanted to invest in the dollar falling, the way you could do that is through an ETF called U Down. That's U. That would be. And you could see it has not performed very, very well. But recently and now today, it's starting to move up here. And recently, it's been trending up in anticipation of the CPI report. If you think the dollar is going to continue doing well, you could always get U up, where you could see that recently the dollar has actually been falling a little bit. So a couple interesting you can pay attention to. So if we look at some things what does this mean for the Fed? And then if we look at some things that we can do, well, what does this mean for the Fed? It really means that if this CPI report is replicated on December 13th, which is when we get the next CPI read, which would be great, right? Then, and when I say replicate, I mean it's also either, or it doesn't spike again. It could spike, and if it spikes, it just ruins all the optimism that we're on a sustained downtrend. But at 5:30 a.m. December 13th, so in a month and 3 days, we'll be getting the CPI read for December. And that's actually before the Federal Reserve meeting, which is really good because what matters more right now, killing jobs or killing inflation? And the answer is killing inflation. Like the Fed does not want to have to slow down the job market. If people can make more money by switching jobs and inflation is low, by all means, have at it. But you can't have a strong job market and high inflation because you potentially lead to a wage price spiral, and then you really have to rug pull the economy like Paul Volcker did and push us into a dirty, deep chin. So, could this report be the start of the Fed pivot?
All right, that's where we're going to stop, Mr. Kevin. Thank you, Mr. Kevin. Sorry I didn't let you chill. Sam, what do you think about this, the latter half of that, before we move on or continue the conversation?
So what do we have coming up? The holidays. And what happens during this time? Well, a lot of companies will be purchasing inventory for the holidays. I already started to ramp up in my inventory, but a lot of companies will be purchasing. So now, throughout the past 18 months, when I purchase stuff in China or India or Europe, my dollars go further because of the strength of the dollar. Now, we are seeing that crest and start to come down, right? And that means that everything that we're purchasing from other countries relative to where it was at the peak, which wasn't too long ago, is going to be more, or we're going to get less inventory because of the ratios changing. Now, is this going to play out into the data in December? I don't think we'll see it yet. Will this continue to collapse the US dollar? I'm not sure. We have some stuff that we're going to get into in crypto related to like FTX and Alameda that I think this is going to be like the shotgun to the balloon, and the balloon is going to get like obliterated because.
Are you locked in on these stables? People talking about the USDT unpegging for some reason, and I have a couple things on that, but I know you have something to pull up first, and I got a little couple things to organize over here. What do you got to pull up real quick? You could probably help us change the conversation, switch it over to away from the CPI data as much.
This is that's just a light little video here of our boy. You know, he's in a congressional.
At this point, he is our boy because we chill with him like every day.
Yeah, let me make sure this
all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There's a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this. Last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again.
I wanted to bring that up because what he just described there is exactly what he was doing with Alameda. Trying to keep, so if I can keep things off the books and you're a regulator, then you don't know what's going on. If you're an investor and I keep things off the books, you don't know what's going on. And when he literally, I think it was in September, SBF tweeted out, hey, we're going to make some changes. This is a routine thing that we do with some FTT, where they did the transfer to Alameda and then transferred it back, lending it to themselves, trying to keep things, you know, so that the market didn't panic and destroy him back then. And it just is making it worse because he's just getting completely exposed for a utter hypocrisy that he does. You had something else that you wanted to cover on this?
Yeah, these guys are so unchecked. It's just ridiculous. This is actually the KuCoin balance sheet. So Sam, and I'll read it off to you because I can't zoom in because it's like an individual picture and it just messes the whole thing up. But I can tell you the top 3 holdings right here, Sam. We have you, and look at the graph at the bottom. That kind of shows the holdings. USDT, 811 million USDT, 231 million USDC, and 186,000 Ethereum. So as you can see, their books got shattered. Absolute, I mean, devastation.
Yeah,
Real devastation with these books. And I want to know how much what are these numbers, Sam, as much as like how much can this affect like something like a stable coin, something like USDT? So that people are talking about USDT way too much. I don't even look. I just get scared. And I'm not saying because it's going to depeg right now or do any of that. But that's one of the only things in crypto where I actually do just not think about it much. And I'm just like, oh no, I got to think about it now and make sure I'm safe and good, because what if they invalidate some of these because of whatever? And that's why you have to look at these balance sheets and stuff like this. Like, and you can just see that they got perma-wrecked. They went from at the top 4 billion to, you know, minus 2.9 billion. So that's like an 8 billion swing.
I'm trying to pull up an article right now.
On what?
It's just not loading on my computer. We're kind of going through a tropical storm slash.
Just put it in the private chat.
Okay, let me do that. And then this is actually in regards to we can run through this article because I think people would get value from this. This is from Cointelegraph. I just put it to the private, where they go through and talk about Tron's stablecoin. And this gives us a better understanding of how at least Tron, but then you also have like DAI is similar to this structure. It's just not using their own coin. It's using a different coin. And I think that people would probably get a lot of value from this. USDD.
Sam, you're on payroll right now. Sam, you're on payroll right now to make sure I don't lose all my money in stables. Okay, I need your help, and I'm willing to cry because I have too much anxiety to think about it, because it's like, oh no, I don't want to think about it. I don't want to go back to freaking Coinbase and move shit to my bank account. No, no, no. Please don't make me do it. Don't make me do it. I don't want to do it. So I'm scared, but like, it's interesting topic. And if you don't mind reading this, I just have to use the bathroom.
Yes. I want to point this out. Yes, perfect. That's a good zoomed in. Perfect.
Hey guys, how's Sam's mic for you guys, and how's my mic? Is everyone hearing us pretty good? Is the audio pretty good? Give us biceps in the chat if the audio is good, and if you think it's not good, just let us know. All right, so Tron stablecoin USDD loses dollar peg on suspected sell-off by Alameda Research. Okay, well, do you want to read it from here? Or do you want to talk about it?
I want to point out something around this peg. So this article, I think, was posted, and then we will read through that. But when was this article posted? Does it say the date on here?
5 hours ago.
Okay, 5 hours ago. However, I looked at Dex Screener, and this has actually lost the peg on the 18th of October and has not gained its repeg. Like,
wait, what?
I would not have my money in USDD personally, because it lost. They're talking about it here, but if you look at the chart, it's lost its peg back in October, in the middle of October, and it's just been getting worse. It's like a trend down to right, so you don't want to see that. So we can get into this article.
Tron stablecoin
with Sam Bankman Fried Alameda Research could be behind the dollar depeg, alleges Tron's founder. Go ahead, Bullish.
I can play it as always.
USDD loses dollar peg on suspected sell-off by Alameda Research. In April 2022, the Tron network launched USDD, a token pegged to the US dollar, as an over-collateralized stablecoin, meaning its likelihood of slipping below $1 should be lower due to excessive reserves backing its valuation. USDD stablecoin slips below $1 peg. But it was not enough to keep USDD's price anchored to $1 on November 8 when some whales dumped over 11 million USDD tokens to seek exposure in rival stablecoins Tether, USDT, and USD Coin, USDC. A day later, USDD's price fell to as low as 96 cents, followed by a modest recovery to 98 cents on November 10. USDD price performance on a 24-hour adjusted time frame. Source: Masari. The selling pressure was visible more broadly in the USDD liquidity pool on Curve's decentralized finance protocol. As of November 10, the pool was heavily imbalanced, holding nearly 82.50% in USDD and the rest in USDT, USDC, and DAI stablecoins. Tron founder Justin Sun speculates that Alameda Research, a crypto hedge fund headed by FTX's Sam Bankman-Fried, could be the whale dumping its USDD holdings to avoid insolvency. Alameda's balance sheet reportedly was 50% FTT, FTX's native token that has recently fallen more than 90%. I think probably Alameda just sold their USDD to cover the liquidity of FTX exchange. The pool currently is back with a healthy rate. pic.twitter.com/osizonk0z. He Justin Sun, at Justin Suntron, November 9, 2022. Miscalculated collateral reserves. USDD is issued by Tron DAO Reserve, TDR, which also serves as the custodian of its collateral. TDR is primarily responsible for selling the collateral to maintain USDD's peg in the event of a sell-side shock. In theory, USDD appears sufficiently backed by a $2 billion pool of crypto collateral in the form of Bitcoin, BTC, Tron, TRX, and USDC, with the reserves reportedly outweighing the stablecoin supply by over 283%.
Pay attention.
USDD supply versus collateral. Source: USDD.io. But there's a catch. Currently, almost all the stablecoin collateral worth in TDR's reserve wallets are staked and earning yields in Just Lend, the largest lending protocol in the Tron ecosystem by total value locked, TVL. Meanwhile, 99% of TRX collateral is locked inside a staking governance contract. TDR also appears to be incorrectly including burnt TRX worth over $725 million as collateral. Overall, that leaves the DAO with about $600 million worth of USDC and $236 million worth of BTC in its liquefiable reserves. In other words, an almost 113% collateral ratio versus the 283% boasted.
Pause it here.
Bitcoin, TRX prices slide.
And then go back down to that section, please. Okay, so up just a smidge. Okay, into this section. Okay, So there's a DAO, this TDR DAO that issues the stable coin USDD. And they're like, you can submit probably, or they collected through an ICO or something, TRX and USDC and BTC. So this is the collateral, right? My house is the collateral against the loan. TRX, the USDC, and BTC are the collateral behind the USDD token. Similar ideas right here, right? Now, they have a boatload of this. It says, meanwhile, 99% of TRX collateral is locked inside of a staking governance contract. So that means almost all that $725 million that is collateral is not really collateral because it's locked in a fucking smart contract. And then you have $600 million worth of USDC. Cool. That's probably still liquid. Probably not going to depeg, I would think. But $236 million of BTC, or BTC 20 grand.
Damn, is Tron gonna rug?
I don't know about Tron. I don't know about Tron.
What do you think? Like, where do you really think? Like, I know I'm gonna let you go back to what you were saying, and I was listening to every word, but I want to know what you think. Like, am I just the only? We're all in the room thinking the same thing. Like, is this next? Like, Tron's big, and now he's coming out and saying he's gonna buy it. Why? Because he needs to say that because he has nothing else behind him now.
He needs to protect his shit.
Is he wrecked?
I don't know. I don't think Tron is necessarily wrecked. I think that their USDD may struggle because how do they maintain the peg? And I didn't look deep dive into this, but just read through this article and getting an understanding of crypto. They have assets, right? So if it's depegged, what do? They sell some assets so that they can buy their USDD to drive up the price. I would think it could work slightly differently. Semantically, that's probably how it's done. Now, if most of your assets are tied up in a smart contract, that means you may or may not be able to access them, or maybe it costs money to access them or a fee to access them, then it's not really liquid. And TRX is down in value because of all of this. TRX comes down. So that 725 million, if they go on to the next section, it says it's down about 12%. So that 700 million is actually down $75 million. So the collateralization ratio, meaning how much equity do I have in my house so that I'm not underwater, right? In this case, could mean issues for them. We don't know how this is going to play out. If Bitcoin does go down to 12,000, I see a lot of issues with this. I see a lot of it. And we can read that. We can read the next section if you want.
Yeah, please continue if you don't mind, if you can get to that section. And
we might have to read it, Bullish. I don't know if it will start.
USDD's collateral ratio could fluctuate further as its reserve assets, BTC and TRX, undergo price declines. Notably, BTC's price has plunged by more than 22% week to date to around $16,500 in a crypto market meltdown led by the Alameda FTX fiasco. On the other hand, TRX wiped approximately 12% off its valuation in the same period, trading at around 5 cents on November 10th. TRX/USD weekly price chart. Source: trading.
Stop after that paragraph.
The Tron token now eyes a break below its long-standing support confluence, comprising its 200-week exponential moving average, 200-week HEMA, the blue wave.
That other stuff gets into like TABS and stuff like that. Thank you for putting that.
All right, so let's talk, Sam. We got 12 more minutes here. Sam Bankman-Fried came out, and I don't even want to read it. It's the stupidest thing that he said, coming out and saying sorry to everyone. I don't even want to put any light on it. Yeah, he came out and said sorry, and then okay, I'll read it because of Sam's face.
Damn, was this on Twitter?
I got you. I'll pull it up.
Okay.
I'll read it. Just let's get 1 second, guys. Make sure you're smashing the like button. And we got 134 in here. We want action, and we're gonna show you the giveaway tweet before we get off. So don't you get it twisted. We got, oh my God, poor guy. I say poor guy because I'm a softie, but F this guy, man. He should have stepped up. This is when I go on these rants about people stepping up, and everyone's like, "Oh, you're such a dickhead." And it's like, yeah, because these people are. Oh, here we go. It's because these people are weak-willed, and this is what leadership This is what no leadership, being unchecked, being not socially aware, being emotionally unfit, having no lifestyle habits. This is where all of this meets big money and trading and leverage. Okay. So I'm sorry. The biggest thing, I effed up and should have done better. And I'm going to read this in a very derogatory way. I also should have been communicating more very recently. Actually, you have been. You've been all over the news recently, interestingly enough, before all of this. So, you were communicating, that's for sure. Yeah. Transparently, my hands were tied during the duration of the possible Binance deal, which was what, a day and a half? I wasn't particularly allowed to say much publicly, but of course, it's on me that we ended up there in the first place. So here's an update on where things are. This is about FTX International, the non-US exchange. FTX US users are fine, except now your reputation is tarnished. So they will abolish you because all they want you for is your reputation, and now it's gone. Treat all of these numbers as rough. There are approximations here. Thanks. FTX International currently has total market value and assets collateral higher than the client's deposits moves with prices. But that's different from liquidity for delivery. As you can tell from the state of withdrawals, the liquidity varies widely from very to very little. 5, the full story here is one I'm still fleshing out every detail of, but as a very high level, I effed up twice. The first time, a poor internal labeling of bank-related accounts meant that I was substantially off on my sense of user margin. I thought it was way lower. Oh, really? Wow. You're lying again? You're going to come on here and just lie again? These guys, God, you see people get curb stomped in videos and you're like, I would never do that. And then you're like, dang, I would do that. Like, you know what I mean? Like, you're like, there's some people, it's just worth it. Like, it's just not right. It's not right to have the reputation. Like, guys like us get the worst reputations. We get called like we're illegal for doing, and we're not doing shit. Guys like this get praised because they're nerdy and people think they're safe. It's not the case. You need males, you need alpha males, leaders. Okay. So leverage. My sense before leverage, 0x. USD liquidity ready to deliver 24x average daily withdrawals. Actual 1.7x. Wow, that's a big jump. Liquidity 0.8x Sunday's withdrawals. Because, of course, when it rains, it pours. We saw roughly 5 billion of withdrawals on Sunday, the largest by a huge margin. 7. And so I was off twice, which tells me a lot of things, both specifically and generally, that I was shit at. And a third time, I'm not communicating enough. I should have said more. I'm sorry. I was slammed with things to do, and I didn't give updates to you all. And so we are where we are, which sucks. And that sucks. Which sucks. And that's on me. I'm sorry. Unacceptable. 9. Anyway, right now, my number one priority by far is doing the right by users. Great, man. And I'm going to do everything I can to do that, to take responsibility and to do what I can. So right now we're spending the week doing everything we can to raise liquidity. I can make any promises about that, but I'm going to try. He's going to go DM people and cry on Twitter.
He's going to do this to everybody to try to get like any type of liquidity.
Right in this face. Anyone with $1. He turned into a homeless guy real quick, begging for money. It's disgusting. I can't make any promises about that. I'm going to try and give anything I have if that will make it work. 11. There are a number of players who we are in talks with. LOLs, term sheets. LOIs, term sheets.
It is kind of like an LOL, actually.
Well, no, he's calling Justin Sun and asking him, since he got nuked, if they can like do a fake deal to like scam people again, because pretend like there's still money there, because there's not. Every penny of that, 12. Every penny of that in the existing collateral will go straight to users unless or until we've done right by them. So there's like 50 grand of people that probably even like are stopped crying by this point to even, this will be like 5 years where they'll get the money back too. After that, investors, old and new, and employees will have fought for what's right in their career and who weren't responsible for any of the F-ups. 13, because at the end of the day, I was the CEO, which means that I was responsible for making sure that things went well. I ultimately should have been on top of everything. I clearly failed in that, and I'm sorry. So what does this mean going forward? I'm not sure. That depends on what happens over the next week. But here are some things I know. 15. First, one way or another, Alameda Research is winding down trading. Yeah, you turn the website off. The website's off. You can't even, it literally says this website no longer exists.
It says it's private. You try to go there, guys.
They aren't doing any of the weird things that I see on Twitter, and nothing large at all. In one way or another, soon won't be trading on FTX anymore. One way or another, bro? Like what?
Because they're going to go bankrupt.
Yeah, there's no core. You just nuked everything. They aren't doing anything weird, blah, blah, blah. Okay, 16. Second, in any scenario in which FTX continues operating, and first priority will be radical transparency. Transparency, it probably always should have been given.
Yeah, no fucking shit. Bro.
Giving as close to on-chain transparency as it can so that people know exactly what is going on. Okay, Sam, now you have to read.
Sorry.
No, you're good. It's good as 17. I'm running out of it. I'm just like,
okay. Number 17. All the stakeholders would have a hard look at FTX governance. I will not be around if I'm not wanted. But all the stakeholders, investors, regulators, users would have a large part to play in how it would be run. Solely trust. But number 18 here. Yeah, you need trust to run a business, bro. And you just completely slaughtered yours. But all that isn't what matters right now. What matters right now is trying to do the right by customers. That's it. Number 19, a few other assorted comments. This was about FTX International, FTX US, the US-based exchange that accepts Americans, was not financially impacted by this shit show. Well, that's good, I guess, if you're in the US. It's 100% liquid. Every user could fully withdraw Mudo gas fees, or minus gas fees, I think is what he probably meant to say. Updates in its future coming. 20. At some point, I have more to say about a particular sparring partner, so to speak. Who do you think that's going to be? You think that's going to be BitBoy? Who do you think this is going to be here? I don't know. But glass houses. So for now, I'll say is well played.
What does glass houses mean?
Wow. Look at somebody. Look at this. Number 20. Read this again. At some point, I might have more to say about a particular sparring partner.
Oh my God, get your stuff. Oh no, he's got beef on Binance. I'm scared about Binance too. And I'm not saying because they don't have a lot of volume.
You think it's Binance?
Yeah, I think it's Binance. And I think.
Yeah, it's definitely CZ, but based on
and I think that CZ's got a lot of money and stuff, but these guys all are propped up rich dudes with over collateralization until someone rugs them. Because they can't not be that, and especially on Binance, because there actually is humans that use it.
This guy's a whiny little bitch.
CZ?
No, SFB or whatever.
Oh my God, he's the biggest pussy I've ever seen, and I hate this. This hurts me as a man just to see this guy. How did he get in leadership? How did he sneak up there? Why wasn't there anyone to check him? Why wasn't there anyone that said, this dude's a freaking dork? Sit down. Let's get some really good work done with a good team. And I'm not saying that he's not doing good, hard, whatever, but he's a lying sack of shit and everyone should have known it.
Dude, that's most of tech. That's how Zuckerberg got where he's at. That's how the founder of Google and Instagram and you name them all, they're all young guys.
We need DeFi worse than anything in this history to work out.
Not number 21 here. Not advice of any kind in any way. I was not very careful with my words here and do not mean any of them in a technical or legal sense. I may well have not described things right, though. I'm trying to be transparent. I'm not a good dev and probably misdescribed something. 22. Yes. So that is from his lawyer. That's from his lawyer. Number 21 is directly from him.
Why all these founders always say they're not good devs? They always make it clear that they let people know that they're not the best dev in the room. Like, which I know they're clearly, obviously better devs, but like you would usually say, like, no, I'm a badass dev. Like I know guys that say they're badass devs and they don't have $1 billion. Like, I'm not saying that, but just like it seems like a trend. Seems like a lot of guys that are not willing or don't want to go down that road, they go down this road, and then they get really good at trading or whatever, and then they end up in power, and it's like they don't really maybe know the basics as much as they, they still know a lot about people and all the shit, but there's some things you just can't know unless you know.
And then finally here, and then I want to talk about Alameda here for a second. And finally, I sincerely apologize. We'll keep sharing updates as we have them. So Alameda is 3 to 4 times, according to data from June, 3 to 4 times the size of 3 Arrows Capital. So if they're not forced to liquidate, if they're not, that means they have to raise additional capital from the outside, or something has to happen from their investors, which is 100% possible. It's 100% possible that they could raise additional capital so that they don't get liquidated, which means infusing additional capital. Then that could avert this crash of like giant amounts of crypto being sold for fire sale prices. But we don't know. And we also don't know who else is entangled in this that then has a ripple effect.
We'll know by the end of the day, Sam, because they're all going to zero, and they just have to admit it. Like that's pretty much like once they admit it, that's when because people don't really know. Cointelegraph 8 minutes ago, guys. Venture capital firm Sequoia Capital has tweeted out a letter sent to its partners, kind of like what I just said. Yeah, like they got to send it out at some point, revealing the firm had marked its $213.5 million investment in FTX and FTX US down to zero, claiming them as a complete loss. So that's just one example there. Gary Gensler blames FTX for 3 sins here. They are.
The timing is perfect too for taxes.
No, correct. Yes. Obviously, they're probably going to get something for it. It might be trivial, but yes. I agree.
Yeah, but think about it. Like the public nature of it is what I kind of look for sometimes. Like I love that public, like, bam, just get it out there, man. Just spill it. Goes like it's fine. 230, not too bad on the rich people like tweet stuff.
Yeah, that's just another stat to the wound because
right, but every stack adds up right now because the stacks don't. You wish there was less stacks on top of this big old eight Billy that
and for someone as prominent as them to be like, "Yup, we're just writing it off." It's basically them letting like the big boys know, like, "Yeah, we're done with this one."
Here's one more to take a look at. I'm going to put it into.
Go ahead.
Share this real quick.
Oh, this one is called "Which Companies Have Exposure to FTX," and it's from the block.
That's exactly what I just put up. That's funny.
Oh,
You
cool.
gave us a little bit of a preview there. CoinDesk. Who still has exposure to FTX?
Is this a video? Oh, please, yes. Can you make sure this video is ready to go, and I'll listen to this bad boy, and then we're gonna close after we talk. We'll close on something, but after we hear what we want to hear.
Yes, and I have not listened to this, but there's other players that are involved in this that could cause a ripple type of effect.
And I already like this trio energy right here. They got good energy, bear market energy, good.
Let's get
There's no audio.
Okay, Sam. So you have to unmute your screen share because I can see down there it's muted, or you did a screen share on the entire screen instead of the tab.
Gotcha. I did I muted myself in the wrong screen, so let's start this over.
FTX is selling itself to Binance, and this all stemmed from a CoinDesk report by our very own Ian Allison, revealing Alameda Research's balance sheet holding a lot of FTX's FTT token, calling into question whether this was all a house of cards, printing all these FTT tokens out of thin air by FTX, Alameda, and borrowing and lending and using it collateral. And then we had those insolvency rumors begin. And then Binance COCZ, a significant holder of FTT, saying that he was dumping those holdings, his holdings, and sending off a panic that's crashed FTT price by over 70% in a day. And if FTX and Alameda indeed rely on most of their value on FTT token, they are getting bought out now by Binance. And joining us now with this top story is Deputy Managing Editor Tracy Wong. So Tracy, maybe you could give us an update on what the latest is on the state of the FTX Binance deal.
Hi, Christine. Thank you for having me. So, the last update we had.
And remember, this is several hours old, so this is before they canceled the deal.
Is about 21 hours ago when Sam Bankman-Fried tweeted that FTX.com would get acquired by Binance. Now, he mentioned that this was a non-binding deal. He only announced that they had signed a preliminary letter of intent and that Binance actually could back out at any time. And it seems that currently, as we would expect, the due diligence process is just happening. So Binance has the option to kind of look at, what is under the hood of FTX and decide whether or not they want to go forward with the deal. We could tell from Sam Bankman-Fried's tweets that, one big part of the deal that was important to him was that CZ seemed to have implied while signing the LOI that, customers would have a one-to-one, that customers would essentially be made whole. So, but we still don't know anything. So we are waiting for official confirmation that the deal either went through or did not go through.
So last tweet chat, you said that rumors of insolvency from Alameda FTX were unfounded. So what are we seeing right now?
So based off of Sam Bankman-Fried's tweets, which he has since deleted, he has tweeted and told everybody that assets are fine. What's surprising about this insolvency is that, exchanges are a little bit different than, say, a DeFi protocol like Lunaterra, or even a, risk-taking hedge fund like Three Arrows Capital. What still I think remains unanswered is why FTX assets weren't backed one-to-one. So, when customers deposit money into FTX and they go and buy crypto, like their funds should be held somewhere. And so when customers redeem, they get the full dollar back. Now, we know that it appears that, there is some type of hole, and that would mean that FTX was taking risk with customers' deposits.
So Tracy,
which we know is taking place. It's like there's zero doubt in our minds that he was taking risk with other people's money in a way that he shouldn't have been doing that.
Let's step back for a second, because I think it helps everyone to understand that the difference between Alameda Research, which wasn't much of a research shop so much as it was basically a prop desk, and FTX, and the relationship between the two, because I think people are hearing the two names being bandied about and they don't quite understand, well, what exactly was FTX and what exactly is Alameda, and where did our story, the CoinDesk story, was about Alameda initially having all this FTX token, correct?
Correct. So Sam Bankman-Fried is closely tied with both entities. He's the co-founder of both. And, it is pretty uncommon in traditional finance for somebody to be heavily involved in both an exchange and a market maker. And that is usually because, it is kind of taboo to have your own market maker be trading on an exchange. People are worried that they might have unfair advantages with pricing data and so forth. And so this is unusually, it is very uncommon in traditional finance. So Alameda is basically, like a hedge fund prop trading shop that, Sam, that does not take any outside capital. FTX is a consumer-facing exchange, and that is where I would say, it is different. Now, the question here is whether or not FTX, because Sam Bankman-Fried is so involved with both, whether or not FTX kind of did something it wasn't supposed to do, and kind of, cross boundaries and that part we can only speculate about at this point, but I think we'll probably hear additional information about that. It'll come out in the next couple months.
Oh, I think you're on mute, Emily.
Emily,
Just quickly, what do you think about this contagion effect? Do you think we're just at the beginning and we're going to see a lot more dominoes to fall?
I think if it's really tough to say if customers aren't able to withdraw their funds, and FTX happened to have a pretty institutional crowd. Like, there were institutional crypto asset managers that were trading on FTX. We saw over the weekend in the past 72 hours that a lot of institutional funds have withdrawn their money from FTX. But if, say, you were a hedge fund and you had hundreds of millions of dollars on FTX and you got margin called, like that would be problematic. It also, could launch a credit crisis because Alameda, if they were to blow up or become insolvent, it could trigger some type of Three Arrows Capital like scenario where Alameda's creditors would then be essentially left holding a bag. It's really tough to say at this point, but it's pretty clear that crypto markets have kind of tanked, and people are on high alert.
All righty.
That was I thought they were going to get into some more meat.
Well, it's all good. Our time's running up.
Yeah, no, that was perfect. If you guys enjoy the show, take a second, share this out with other friends that you have in crypto. Help them out. The best idea you can do in this time is make friends with people in crypto so that you can learn faster, right? You can grow faster. You can help those people. So I highly recommend making friends with people in crypto. That's all I got. Jump down below if you want to support the channel.
I wrote in the title, I misspoke. I did a stream before this because I got really excited about some stuff that was going on. And then I was going to highlight the fact that Richard was right about a bunch of stuff with a couple of videos, but I'm going to do that, I think, today still. So I'm going to pull up some videos in the next half hour, 35 minutes, 40 minutes of Richard Hart being pretty darn right about some of these macro concepts. It's exciting. It builds confidence in me when somebody's correct on something, especially when it's months and months before. That's what I look for when I'm, buying stuff. I want to see if my guy's locked in. It doesn't mean his personality has to be gingered for me all the time, but I want to see the information, of course. So we're going to look into that some more because, Richard has been known to be really nice to some people at sometimes in his life and be really honest. And I think right now that's at a premium. And he hasn't, like, even Jack says himself, like, everyone thinks Jack hates Richard. He's like, he has never done anything on chain that could put you in jail ever. Or like anything like that, like anything like, and it's just like, that's just the truth. Doesn't mean it's not making money for whatever, but it is DeFi. You know that it is DeFi, which is crazy because it's just, we were telling people back in the day, there is no DeFi. Like there's really not much. There's Uniswap, and then there's Ethereum, and then there's Hex, some of those derivatives, even Zen would be in that sense for me, Bitcoin a little bit, like as far as, so it's pretty crazy to think. Guys, we don't have much competition. Things could get crazy. I'm just saying that. Volatility up, volatility down. Scared you should be, but smart you should be with USD on the sideline. Sam Bankman-Fried, the entire crypto space. That looks like a fun little Rumpty Dumpty right there. Poor girl. My God, I didn't even think about that. That actually probably happened. Rough. Anyway, have an amazing day, guys. Crypto in the morning, every single day. Go to my pinned tweet. If you retweet it, I will follow you. We're trying to get the CITM Cast channel to 1,000 subscribers, proving to be one of the most difficult things a man could ever have to do in his life. So I am going to ask everyone in here, CITMcast.com, please go to this link and just hit the subscribe button over there. Get us to 1,000 on the CITM Cast channel so we can take this Crypto in the Morning experience to the next level, because me and Sam are going to be streaming a lot individually and like whatever on our own streams. Like that's not going to go anywhere, but we're going to get a little more We're going to try to punch through some of these baloney little limp noodle losers that are in the crypto space and get a little bit serious. But, you know, I don't like to be too stressed out, and I like to make money in crypto. So my primary focus is probably focusing on crypto, but that's like, this show is like where I get a lot of my energy out. So let's get it out of here, man. Good to see you.
It's you too. DeFi Proof, take us out of here.
You already know what time it is.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
We ain't on pause.
Crypto in the morning. Crypto in the morning.
We're here to take notes.
Crypto in the morning.
Crypto in the morning.
Crypto in the morning.
We ain't on pause.
Crypto in the morning. Crypto in the morning.
We're here to take notes.
Smoking a blunt on my way to the gym. 11 a.m. and I'm already tuned in. Got me some hacks and I'm making a stay. Got me some heads on, I'm making it rain. Pay me some maxi and that's just in case. GymRatCrypto sent me to show you the way.
DeFi Proof.
Crypto in the morning.